The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we have a little bit of volatility this morning with some economic numbers coming out in the last half hour. You have the S&Ps basically flat. You're positive by 1 point, but we were approaching about 39.80 at 8:15 this morning. You see the volatility about 8:30. We got ADP private payrolls. We'll jump over to those in a moment, but right now you got the NASDAQ 100 up about 15 points, S&Ps up by 1, the Dow negative by just 2. As I say that, it goes flat, and you got the Russell positive by 2 points at 1840. How about Bitcoin, man? What's it doing? I don't know, but it's trading higher. We almost got 17,000 overnight. Doesn't make sense, folks, that that's somehow the low with everything going on in Bitcoin. Ethereum up to 1250 right now. Crude, you talk about a move, man. Crude. Yeah, we're going to be talking to our man Teddy Kegstad at 40 past the hour. We always talk a little bit of Forex. We always talk a little bit of crude. We'll get his take. You talk about a two-way market, man, from Friday at $80 to Monday at $73 to Wednesday at $81 in the price of crude. We got the gold contract right now. There's some volatility for you as well. Almost makes it to $17.80. We're back to $17.70. You're still positive by $6 on the session for gold. And you jump to notes and bonds. We got a little bit of lower price and higher yield right now. You got the 10-year negative by 6 ticks. You see the drop-off. From about 8:30 this morning. We're looking at a yield right now of 3.76%. The yield on the 10-year, the 30-year negative by 8 ticks at 126.13. Let's check in on the volatility index. Sitting at about 22, pretty much where we've been for this week. Chopping around a little bit of elevated levels from where we were on Thanksgiving. And let's jump over to some of the currencies, man, because we got some movements this morning. Quite the move on Monday. And you got the dollar right now negative by 32 ticks at 106.49. We jump over to the euro US dollar right now, pushing 103.72. We jump over to the dollar yen. Dollar yen, there's a little bit of a rise to 139.32 for the dollar yen. All right, let's jump over to the economic data point we get this morning. And we got a couple. But payrolls, ahead of non-farm payrolls on Friday, private payrolls, ADP rose to 127,000, the smallest gain in 2 years. Now, one of the most interesting things is always seeing how the market is going to react to bad news versus good news. Is bad news good for the market? Is good news bad for the market? Well, this morning, we missed the expectations, as in they were looking for about 200,000 was the jobs number they were looking. It comes in at 127,000, the smallest gain since January of 2021. So you're talking about almost 2 years. And now the conversation becomes, is this the turning point, right? In the economy, is this slowing things down to tame inflation? It's probably what the Fed wants to see. Smaller numbers, bringing down the economic growth that will help inflation. Payrolls rose the most in leisure and hospitality, while manufacturing shed 100,000 positions. And you talk about pay increases, man. If employees stayed in their jobs, 7.6% from a year ago, but that is the second monthly straight deceleration, okay? So we're seeing decelerations in the last 60 days. And that is suggesting workers' bargaining power may be starting to erode, okay? For those that change jobs, median increase in annual pay, 15.1%. Man. Pretty remarkable, that number. Job openings, while still elevated, have come down in recent months. And we get that number on Wednesday. And then, of course, we get non-farm payrolls on Friday. Northeast added the most jobs. Midwest posted actual declines. We get some Chairman Powell speak today. And we're going to go from there. The other number we got out there is third quarter GDP. And this is, I believe, the second revision. Let's see. Yes, so the previous report was 2.6. It was a revision, okay? And this is The third quarter of the year increased at 2.9% annualized rate during the period. Meanwhile, another key official gauge of activity, gross domestic income, rose at 0.3% rate in the third quarter after falling 0.8% in the third period. It's a measure of the income generated and cost incurred from producing those goods and services. So we take that number, we get Chairman Powell today, we get non-farm payrolls on Friday. That's going to be a big one to say the least, man. We'll see where we go from there, but let's jump around to some of the stocks this morning ahead of Chairman Powell coming up today and on the news of a little bit of a miss, but I'm kind of surprised you get that type of a pullback, because isn't what the market's kind of looking for right now? The Fed is going to be data dependent, man. And you need to see a slowdown in the jobs. There's some great discussions going on in the Tiger's Den today, talking about what kind of possible future may hold in terms of, are we coming into a recession? Some great comments out there for quotes for different analysts. I mean, folks, if you haven't joined the Tiger's Den, please check it out on the front page of TFNN. It's $1 for the year just to make sure that we're verifying identities, basically, so it doesn't become a spam box in there with multiple different people. That way we verify identities. We got a good group of guys and women in there. Just great discussion, man. I was reading it this morning because, boy, everybody's got an opinion, folks, and nobody knows who's going to be right, okay? What is a recession going to look like this time around if we get there? There's a lot of different things going on right now, and it doesn't have to be your normal type recession in terms of where we are with jobs, where we are with spending, where we are with household income. You just saw the numbers in terms of the rise that we have. 15.1%. If you changed jobs in the last year, folks, your income went up. That's a staggering amount of money on most occasions. We don't see that often. And then you look at the amount of money that people have in household wealth in terms of on their balance sheets, et cetera. Interesting. All right, let's see how some of the FANG stocks are trading. We'll kick it off with the biggest one of all, Apple. Up a bit, 140, 158. Now, this thing's gotten pummeled, man. I talked about it yesterday with Kevin Hincks, and we'll be talking to him after the break. But Apple's got 16 billion shares, folks. 16 billion. I think it's 15.9 something billion shares. But call it 16 in your head, okay? So every $10 that Apple trades is about $160 billion in market cap. So guess what? From the Wednesday before Thanksgiving to where we are right now, Apple has lost $160 billion in market cap. Pretty remarkable, man. It only takes $6 and change for Apple to move $100 billion in market cap. You move $10, that's $160 billion in market cap. Now, we had a great question in the den yesterday talking about Apple, talking about Disney. And it is interesting when you look at the type of money that Apple has and the size of the company it has, and you look at Disney for the market cap, I think you're pushing 170. Come on, pull it up. It's not giving me the number here. But Disney, there it is, $168 billion market cap. So to put things in context, right, in the long term, Apple has lost $160 billion in market cap just in the last, 4 or 5 trading days, the last week or so. That would be akin to basically the whole purchase price for a company like Disney. Now, obviously, they're going to have to pay well above the market value of Disney right now if they're going to go in there and make a bid for that company or anything like that. But keep that in mind when you have that discussion with yourself, man, because $170 billion seems like a lot of money, and it is. But sometimes I think it's hard to keep track the type of money that Apple has and moves, because Apple, there it is, $15.908 billion, and they're a company valued at $2.25 trillion. Tough to comprehend. Stay tuned, folks. We'll get the S&Ps up by 1. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by 4 points right now. We got all the markets sneaking back into the green with the NASDAQ 100 futures up by 22. We got the Dow up by 17 and the Russell up by 4. Let's jump over to our man Kevin Hincks. Every trading day, folks, right here on Tiger TV at 12 noon Eastern. Put it on your calendar. Fast Market on the TD Ameritrade Network with your host, Kevin Hincks, and Tom White, the whole team at TD Ameritrade Network. They got some great guests. They bring them on the program, break down the action. They walk you through 3 hypothetical trade setups on most days, all of them using options and all of them using defined risk. And, man, we got quite a market with economic news. We got the chairman of the Fed speaking today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, there's a lot going on today. News, events, earnings, they're coming at you like a fire hose, Tommy. I mean, this is a lot for the market to consume and digest, and it's trying. I mean, you saw yields go from down on the day to up on the day. Why? GDP. The second look at third quarter GDP came in much stronger than expected, Tommy. And why? Business spending and consumer spending both higher this month. So in a market where you're expecting things at the consumer level and businesses to slow down, they're going the other direction, Tommy, and that's why yields are higher this morning. But we did get, well, in the column of bad news is good news, we got a weaker ADP number this morning, and we got some volatility in mortgage apps from coming off of a Thanksgiving week. So we'll have a bunch of data coming up for sure, but so far we're looking forward to how Jerome Powell is going to put a big bow around all this data and guide this economy going forward. Most people think he'll go from 4 straight 75 basis points moves to a 50 basis point but, and here's a big but, Tommy, I think the rhetoric, the sentiment will stay the same out of Jerome Powell. Think about this, Tommy. The Eurozone overnight, they got their CPI data. It went from 10.6 to 10%. And the calls are for the European banks to slow down the interest rate hikes with still a 10% inflation rate. And they're calling for them to slow down. That's not going to happen. Christine Lagarde, I think one reason our dollar's down and the euro currency is higher because she came out extremely hawkish, Tommy. So there's a lot going on, Tommy, as you know, but really interesting data to start the day. We're going to get more. It's coming at a fevered pace, Tommy.
You did a great job of the wrap-up, man, and it's almost trying to figure out, and I think you summed it up well in terms of my opinion of what's mattering most, but it is pretty interesting, Kevin. You got the GDP, then you got the jobs number, and I think on the jobs front, and this is my opinion, folks, that the market's got to be looking for, the Fed's got to be looking for at some point a slowdown being a good thing, because bad news is the good news, the whole conversation. But at least on the jobs front, I don't see how we come out of inflation if we're crushing 200,000 or 300,000 jobs a month on a continual basis. We get the non-farm payrolls on Friday. You talked about the GDP number, and it is pretty interesting where we are. 4 straight 75 hikes, and context is important, folks, and we might go to 50, and the market might love that. But, boy, inflation's got some pretty lofty numbers still, Kevin. So the data is going to be, what drives this market overall, as it has been. And we get some pretty important data as we go forward. We get the numbers for PCE, I believe, tomorrow, correct? And then we get non-farm payrolls on Friday with some earnings companies coming in today. And as a trader, Kevin, on the volatility index especially, right? I was taking a look at yesterday. VIX sitting at about 22, elevated from where it was on 20. On a general basis, Kevin, and we've talked about this before, the rule of 16, if you could go over it for the listeners if they haven't heard it, because, man, I went back, Kevin, and I know we all remember it, folks, but it's kind of tough to even think about at the time. And I'm cherry-picking some months here, Kevin, but, boy, I wanted to see. I mean, there was a year I'm looking at 2017, Kevin. I don't think the VIX saw a number above 17, and we saw a low of 856. We've seen a VIX of 17, I think, for a few days at the beginning of the year this year, and that was it. If you could go over that rule of 16 and just your general take of this elevated VIX, especially as you guys do such an outstanding job on Fast Market talking about options and how that plays into things. Because we're at the lower level that we've been this year. I got the chart up on the Thinkorswim platform with highs at around 40 and lows kind of around 20. But in more normal times, and that can mean a lot of things, man, this is a very elevated VIX for a very extended period of time, especially where we've been kind of pre-COVID, at least, in terms of normal times on a volatility index.
Well, Tommy, when you think about the 16, remember what the VIX is. The VIX is the implied volatility of the SPX, right? That's, in the simplest definition, that's what it is. Now, the rule of 16 applies to the relationship between the level of implied volatility in the VIX and the level of movement in the S&P 500. And here's what it is. A 16 VIX implies a 1% move a third of the days, right? It's that 62.8 versus 37. It's that one standard deviation move. A 16 implies a 1% move. A 24 VIX implies a 1.5% move a third of the days, and a 32 VIX implies a 2% move a third of the days. So now you can look at the relationship between the VIX and the S&P contract and say, which is out of line, right? Is the VIX too high for what the market is doing, or is the VIX too low for what the market is doing? And that relationship that moves back and forth, higher or lower, is how we look at the overall market and compare those two. Now, it's more of a benchmark, but that's the general idea how that's calculated. 16 equals 1%. Remember, a third of the days, 1 out of every 3 days. 24 is a 1.5%, and 32 VIX is a 2% move, Tommy.
It's a great breakdown, man. And I remember the first time I think you were talking to my dad about that. And it's so important, especially if you're trading options, especially in the S&P, but in anything, because it's priced in. And I just find it so remarkable. It's so elevated. But I heard a statistic yesterday at Tiger's Den, Kevin. I think it was 57 days this year. The S&P has declined at least 1%. The last time that happened was in 2008. And that's just down, folks. The VIX is talking about volatility in either direction. That is just down, that we've had 57 days of greater than 1%. Pretty remarkable in this market. With that in mind, Kevin, we have a lot of economic numbers out there to discuss on the program. I'm sure you guys will be talking about, but what else do you have coming up on Fast Market today at 12?
2 names coming out with earnings after the bell today, Snowflake and Salesforce.com. That's in the first segment and the third. And then in the middle, Likefolio is going to do a presentation on Dollar General. They have earnings coming out before the open tomorrow morning, Tommy. So 2 days in a row, we're looking at discount retailers from Five Below yesterday to Dollar General today.
I was listening to that discussion on Five Below yesterday. Pretty interesting discussion. I don't know if I've been in a Five Below. I've seen them, but I got to check them out after that conversation because it seems like that place is a mall in its own, as you guys were discussing. So I want to check it out, man. And Salesforce, boy, I get the chart up from 311, folks, cut in half more so to 150 right now. Strong company, man, but obviously got ahead of itself. Kevin, I appreciate the time as always on a busy morning, man. We'll be watching at 12 o'clock today, and we'll talk to you tomorrow.
Buckle up, Tommy. It's going to be a busy day. Have a great one.
You too, man. Thanks so much. That's right, folks. Buckle up and stay tuned and check out Fast Market at 12 o'clock today. You talk about a pullback, man. Look at that chart on Salesforce. And I believe in this company in the long term, folks. But boy, and Kevin said it before, anything can be oversold or overbought, folks. Even strong companies, even horrible companies. One example, obviously getting a little bit ahead of itself at 311. We're at 151. We're coming back for the opening bell, folks. Stay tuned. We'll be right back in 3 minutes. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, everybody. We got markets open, and you're looking at S&P basically flat right now at 3962. NASDAQ 100, we'll call it flat as well, 11,525. You get the Dow barely positive by 45 points. That's about close to 0.2%. You got the Russell up by 0.3%. Jumping back to some of the economic numbers. So Kevin Hincks referenced it, talking about the Eurozone inflation. The reading for November was 10%. The market was looking for 10.4. reason to be excited, but I don't know how excited you want to be. The drop from 10.6% in October was the biggest since 2020 and was thanks to slower advances in energy and services costs, even as food prices grew more quickly. Food prices still growing over there, okay? And that's the chart I wanted to bring up, man. Inflation, this is Euro area inflation. The headline number is in black. The core number is in red. They're going to be looking for more of a rollover than that, folks, okay? That is not a decisive break in inflation where they can let off in any dramatic fact. It could be, right, but you don't know, okay? It could be, but they need verification. That's kind of the Fed, right? The Fed is going to wait to be sure that they've crushed inflation, folks, because they were late to the party when inflation roared, and they're going to be late to the party when inflation finally settles. It's the only way to make sure that they don't prematurely, okay, allow inflation to persist, which would be much worse for the economy in the longer term, even though things are a little bit tough right now. But boy, you look at that chart, right, and you say, okay, and yes, they've, as it says, okay, the ECB officials have highlighted the data as crucial for their judgment over whether to raise interest rates by 75 basis points for a third straight time. An outcome that may now be less probable, okay? But they gather on December 15th. The Fed for our Fed is December 13th and 14th. So 2 weeks from today, we get a Fed decision, probably going to be 50. We'll hear from Chairman Powell today. But right now, money markets are pricing in about a 57 basis point rate hikes by year end. And European bonds extended losses after Wednesday's release, with 2-year German yields up 6 basis points. So, yes, that could be the first indication that inflation in the euro area is pausing. That's the reason why we have some currency moves. We'll talk to our man Teddy Kegsack coming up after the next break. But boy, oh boy, keep that chart in mind, folks, because that's going back to the year 2000, man. And you're talking about rapid inflation, and they need to see more of a decline than that. And on the core basis, there's not even a peak yet on the core. And check it out. We've seen a couple pullbacks on the core. This is from the year 2000, 2024, okay? We've seen some pauses, haven't seen a pullback like that. But, folks, we just pulled back to 10%. We're not at 8, we're not at 6, we're not at 4, we're not at 2. We're at 10. We're at 10%. Keep it in mind, man. Quite a number. All right, you talk about quite a number. Let's jump around to some of the stocks that are moving this morning. CrowdStrike. 20% to the downside. We'll call it 21%, man. 109.30 for CrowdStrike. And, not exactly the numbers they're looking for. The company's subscription numbers came in below analyst forecasts. They reported better than expected profit and revenue, but the economic uncertainty is prompting customers to delay spending. And, that is quite a drop-off, man. And you put this thing, how about cut in a third now? You are back to basically where you were trading at July of 2020. You're talking about 2.5 years wiped out just like that on CrowdStrike, let alone if you were ever buying this thing anywhere back in 2021. You're in a pretty decent losing position right now for CrowdStrike. On the flip side of that, we got some stocks trading higher. Petco, I believe they were higher. Let's see how they're trading this morning. Woof. I should remember that one. Woof. Yeah, they're up 8.5%. Check that one out. So they come in line, basically 16 cents a share, which matched the numbers. They're selling off a little bit on the open, though. The revenue slightly below estimates. Comp store sales, 4.1%. How about that? The market was looking for 3.5. So people still spending on their pets. And what else do we have trading higher? Yeah, Workday. That's right. Workday is higher, man. Human resources software. There's a pop for you, man. I see these ads all the time on Bloomberg, or at least I did. I'm not sure I've seen them recently, but Workday up 12%. But keep things in mind, man. All you're doing is you're trading back to where we were 2 weeks ago on Workday, right? This is kind of the upper boundary line of where we've been trading at since it gapped lower in September. So we're pushing 161, but Workday trading higher today. Let's check out some of the other companies that are moving today. We got Hewlett-Packard Enterprises. They reported quarterly earnings sales and issued strong revenue guidance, so they're up a bit. That's quite a surge, man. From $12, we're pushing 16. Biogen is up again. This thing is just like going and playing the blackjack tables, man. Anytime. So there were a couple deaths reported in their Alzheimer's trial. Now it's being reported that those could not be attributed to the treatment. Volatility is going to persist on that one, folks, in a big way. And what else do we got? Hormel. Yeah, they're lower. HRL is their symbol. Yeah, off about 3%. They've slid the last few days, man, from about 49.50. Look at that. Up to almost $50, down to 46. Hormel, earnings beat estimates, but sales came up short. A weaker than expected outlook, and it said it expected a continued volatile and high-cost environment. Things are persistent, man, and they are going to persist for some time, to say the least, folks. We're not out of the woods just yet, and we'll see what Chairman Powell has to say this afternoon. All right, what else we got pulled up here? Yeah, so how about oil? We'll chat with oil with our man Teddy coming up after the next break. But oil rallies above $80 with OPEC Plus decision, China demand in focus, and rising for a third day. We pulled up the chart at the beginning, but we're above $80, man. Inventories fell by almost 8 million barrels. At the same time, traders are watching the demand outlook in China as markets in Asia were buoyed by bets on its economy further reopening. Now, what's so crazy about China, man, thinking longer term is, even if they reopen, folks, you're going to see some real hardships going on in China in terms of people getting sick, because they have not lived through any COVID outbreaks to any degree like the rest of the world has. So be careful to temper your expectations over in China, because they have a very difficult deal going on there. Yeah, and we'll see where we play. Where we'll go. We'll talk to our man Teddy coming up after the break. But oil's not slowing down. We're back above $80. We were just sitting at $73. You got to fill up your tank. Go do it right now, folks, because the last few days we're probably going up in the price of crude. That would be my guess. All right, let's see what other articles I have pulled up here. Yeah, this one's an interesting one, just talking about the global picture of streaming. Okay, I have not seen the movie, but Netflix Glass Onion. And so they released this in 700 theaters for a week. Now, normally when you get a big release, you're talking about 2,000 to 4,000 theaters is a traditional wide release, okay? And what this article is talking about is that they took in 13 to 15 million during that 5-day stretch. But analysts think they could have pulled in 200 million if they play out in theaters for a week. 200 million if they push this thing out to basically a regular release. At a time when Netflix is struggling to make money, they're releasing ad-supported tiers. It seems like if you have the opportunity to crush 200 million for a movie that's already made, you might want to take it, man. Interesting to see how this whole business plan will play out. Now, this is some type of a sequel out there. Not even familiar with the first movie, but nonetheless. So what do they do? Instead, Disney and Marvel, their Black Panther, took the lead at 45.9 million. Nonetheless, stay tuned, folks. We'll be coming back talking to our man Teddy Kegstadt. We'll talk some Forex, some crude. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps up by 1 right now. We got our man Teddy Kegstad just working through a few technical difficulties, getting his mic working. We'll talk to him in a couple minutes, I believe. But jumping back to what else we have, let's jump back into the jobs number for a second that we got this morning. Interesting ahead of where we go for Friday, okay? But you got 239,000 jobs were added in October, okay? The number that we just came with is 127, and the market was looking for about 190. It's pretty remarkable, folks, that the unemployment rate sits at 3.7% right now, the lowest since 1969, and meanwhile, the Fed has hiked interest rates 4 times 75 basis points. They're probably going to do it by 50 basis points 2 weeks from today, and we'll see where that goes, man. The biggest gainer by far was leisure and hospitality, which saw an increase of 224,000. What would be going on without leisure and hospitality right now, right? There are winners and losers in this market, man. Manufacturing, 100,000 lost. Professional and business, 77. Financial activities, 34. Information services, 25. Goods producing industries overall saw a decline of 86,000 jobs, right? Big numbers. And we talked about the pay, though. 7.6 from a year ago, but the number was 7.7 from October. So you're seeing kind of that rollover there. From a size standpoint, all of the job creation came from companies that employ 50 to 500 workers. Small companies lost 51,000, while big firms were off 68,000. So the sweet spot, 50 to 500 workers, adding the 250,000 jobs. If you're in the small portion, you're losing 51. If you're in the bigger one, you're losing 68. Interesting how that sweet spot comes into things. All right, let's see what else we got pulled up here. Yeah, this one's an interesting one just to talk about and think about. Fat cap margins make S&P a high-value target in inflation wars. Excess price gouging has come into the crosshairs. Price controls in the past have been a disaster. Yeah, I would say so, man. But boy, you talk about it, record margin expansion. S&P company margins are still hovering around historic levels. Keep this one in mind, man, when you think about where we can go in this market, because that is quite a margin compared to where we've been going back to 2018 and before. All right, with that in mind, let's jump over to our man Teddy Kegstad. We talk to Teddy every Wednesday, folks. You can check out Teddy's newsletter, the Tiger Forex Report, on the front page of TFNN. Sign up for a month, folks. You get access to the newsletter for a month. You gain access to an outstanding webinar Teddy did recently. That's a subscriber webinar. You gain that. You get the newsletter for a month. You don't like it for any reason, folks, you cancel. You get a money-back guarantee. And, boy, we got so much going on in this market. Teddy Kegstad, good morning.
Good morning. Can you hear me okay, Tommy?
I got you, man. I got you perfect.
Okay, great. Yeah, we got a lot to talk about today. You want to talk about crude first?
Let's do it, man. You talk about some volatility. What's going on in crude right now?
Yeah, well, the holiday markets are over, and, of course, everyone's looking at China and a whole bunch of things trying to figure out where we're going to go with this, right? Well, here's what we got to pay attention to. We have a lot of things going on that are going to impact crude. One, we do have a Fed meeting coming up in 2 weeks from today. Also, we have a railroad strike in this country that is looming over us. Also, in 2 weeks, if it's not on Fed Day, we may also have a railroad strike to deal with. Don't think that Chairman Powell is not looking at this as well. We have Iran also as a problem with their missile strikes that they had last week. That's kicking up the Middle East. You have Turkey, Syria, and Iraq that had a Kurdish conflict over the past couple of days that could start to become a problem also. So we have a lot of turmoil that's brewing in the Middle East. Hopefully it gets kiboshed. That could be very bullish for oil. Then we have the winter coming ahead of us. So I think that all these things are the perfect storm. People who get the Tiger Report know that we just bounced off of our monthly support target for the crude oil market, and you can see how we dipped below it and came flying back like a balloon underwater with this move. And I think that, yeah, the bulls are back, and I would think that we're going to trend higher into the Fed meeting with crude.
Yeah, it's pretty interesting that we were sitting at $73 or whatever. I was having a conversation with myself, man, as crude was cascading on Monday morning. I said, are we going to get $60 or $65 crude or something like that? Not yet, at least. Back to $81 makes a little bit more sense, in my opinion. What was your take? Can we jump around to just kind of some of the movement this morning that we're getting? So much economic data. We got the GDP, we got the jobs, you got non-farm payrolls on Friday. We have Chairman Powell today, some action in currencies, and we have ECB inflation, Euro area inflation at 10%. What are you thinking of the current action like today and on all this economic numbers with the chairman coming up speaking today as well?
Well, I think that he's going to hold his stance, and guess what? Rates are going to keep going higher in the next year. They're going to keep pushing this. Remember, over a year ago, I said, when we were going into 2022, that this is the age of the central bank wars again, and that's what we have going on now. Now the heat is really here. The U.S. really pumped it up. Europe really was hesitant to follow our lead. They were even further behind the curve than we are, but that's because they were doing all the quantitative easing while when we started our hawkishness, So they're playing catch up, and I think that is slowing the differential between the euro and the U.S. dollar as far as the trend. But overall, we're still ahead of that. And you have to look at where we're at on yields, okay? The bond market is $10 off its lows from a month ago, okay? We have a Fed meeting in 2 weeks. Even if the market has a half a point factored in, it doesn't have the next quarter factored in. That's for sure. So you have to look at it like an options trader right now. What's going to happen in the next 2 weeks? What are the odds that yields are going to stay low where they're at right now, or if they're going to accelerate and go higher? Odds are much in the favor of going higher over the next 2 weeks, which means we start to head back towards those lows. That's the full trend of the interest rate market. That should uplift the U.S. dollar as well. Now, the euro that's one of the key components of the dollar index. So the dollar index is not going to go screaming higher if the euro is only slowly falling against the dollar or maybe even rising against the dollar. But look at the other currencies. The other currencies don't have the ability to move against the dollar like the euro. So even if their central banks are way behind ours as well. So I think the dollar strength you're going to see happening over the next 2 weeks for sure.
Nice. It is interesting, man, when you jump around. Some of the pullbacks, I got the dollar up there at 106. Euro's gotten quite a spike. I had the chart up there, the euro area inflation at 10%. It still looks like it's skyrocketing higher, so not sure how that gives them too much pause, even if it's a slight miss or deceleration from the numbers that we've had previously. And how about the yen? Because the yen's got some action going on today as well. 139.31. What's your take on how the yen comes into that?
Yeah, you know what? The U.S. dollar yen has been a pain of a trade the last week. It's going sideways. But you got to realize it gotten so weak against the dollar. So it was an overdone rally. But overall, I'm still bullish on the U.S. dollar yen trade. And I think you really have to watch crude. Like I told you a couple of months ago that crude was off the table with the U.S. dollar yen. Now I think it's coming back on the table because if we really do see a significant rally in crude, we're at $80. It's pretty comfortable for most people, but it's not that comfortable. And if we get back towards 90, 95 going into Christmas time, well, guess what? First quarter of next year, we're probably looking at, crude oil of over 100 again. And if that's the case, with other commodities, especially energy commodities going up, and if there's a railroad strike, that is really going to pump it up in this country. Even if global pricing tries to stay mitigated and sideways, in the U.S., if we have a railroad strike, guess what? How does the oil move around this country to refineries? It goes Warren Buffett making all the money shipping it.
So hopefully that one gets avoided no matter what, man. Can you stay with us for the break, Teddy, for one more quick segment? All right,
Absolutely.
perfect. We'll be right back. I want to talk a little bit more about crude, and we'll talk the market. Stay tuned, folks. We'll come back with Teddy. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps basically flat, chopping around. Maybe we're waiting for Chairman Powell. We're talking to our man Teddy Kegstad. And folks, come on over to the front page of TFNN. Check out the Tiger Forex report. I got the webinar pulled up here that Teddy did. Forex strategies and fundamentals. What is behind the Tiger Forex report newsletter? He just did it last month, about a month ago, folks. Still very, very recent. And Teddy, for those that weren't able to check it out, could you give them a quick description of number one, the newsletter, which you put out every week on Monday, and updates when warranted, and then just a brief description what you talked about in this hour-long webinar that they'd get as well if they signed up?
The Tiger Forex report, we always go over all the major Forex currency pairs. We also have information on the 30-year Treasury bond and also on the dollar index and also on crude oil and how they relate to the different currencies. And as we break down the currencies each week. We show the dynamics of which other markets influence them and what they should watch out during the week, So, and this definitely, the last webinar we did is for this quarter is shown to be a quite useful tool, that's for sure, as far as guiding you on the trends in the long term, and that's really.
It was a great webinar, man. I was in there, man. So I just, I encourage people, folks, check it out. You got a 30-day money back guarantee in currencies, bonds, crude. They're driving so much of the action right now. And we'll leave it on Teddy. So staying super short term, as a Forex trader, what are you looking for on a day where you get Chairman Powell? We got about 30 seconds here, but is this something that you wait for him to talk and then you make a decision? Are you looking for any type of direction moves from the chairman today?
Not with the way the trend is. Now, if I was questioning whether he was going to change his stance, then I might be listening to it. And if I hear that he does change his stance afterwards, I'll know by the way the market reacts, and then I'll take it into account. But right now, the way I'm looking at it, the Fed is not going to change, especially because the other banks are jumping on the bandwagon. So every raising now by the ECB would counteract anything we've done for our dollar and for our inflation. So what does he care about? Does he care about their inflation or ours?
I appreciate the time. I agree a lot with what we're saying, man, and we get to see it all play out, which is the best part.
We got a webinar coming up in 2 weeks, my friend.
What's that?
We got a webinar coming up in 2 weeks. Don't forget.
I love it. We're going to get it up on the website. Folks, sign up right now. We're going to get it up on the website. Teddy, thanks for the time, man. We'll talk to you a week from today.
Sounds great. Take care.
Okay, have a great one. Folks, thanks for tuning in. Stay tuned. Basil Chapman's up next. Live programming all day. Have a great Wednesday, everybody.